Chicago, Windy City. Let's welcome in our panel here today. Ann Gillen Lefevre, am I pronouncing that correctly? From Village Farms, good to see you. Zachary George from SNDL, formerly Sundial, good to see you, sir.
Great to be here, Sean.
David Klein, CEO, Canopy Growth. Good to see you, and Bo Whitney from Whitney Economics. So big round of applause for everybody joining here today as we talk about, I think, a hot topic about Canadian companies entering into the U.S. market. And I think, well, let's just address it. You know, we've looked at Canada in the past, and there's always that perception on what not to do as far as the Canadian cannabis landscape and the way a lot of these companies are run. But I actually think that's news from, say, 5 years ago. So I'll start with you, Ann. Where are we right now as far as you as a company today, and is there a lot of misperceptions in the way Canadian companies are being run right now?
Thank you. Absolutely. First of all, I have to start by saying we were founded in Brooklyn. So we bilocate between our Canadian operations and our US operations in our businesses now. So we do consider ourselves members of both communities. I think the issue with Canada was really one of problems we brought on ourselves as an industry. Too much supply, not great enforcement. But we've learned a hell of a lot along the way, and we now have a business that, from a legal perspective, is approaching $5 billion in sales. We are a legal market, federal legal market, which means all of us here have worked through the issues of selling to multiple customers in multiple locations, the provinces across the country. And we are working feverishly on innovation and getting to the consumer and building different form factors. So in those 5 years, we've really built very credible business models. In our case, also with a strong EBITDA profitability since inception.
So battle tested.
Battle tested.
Do you agree with that, Zach?
I do. When you look at the early years in Canada, you really can't blame people for the criticism and ridicule that they were, aiming at Canada, whether it was poor governance practices, a lack of professional management teams, promotionalism, bad capital allocation, the list goes on. But I think that's changed quite significantly. In October, it'll be 5 years that we've had a federally legal market, and things have changed substantially.
Time flies, doesn't it?
It does.
David, arguably the most well-known cannabis stock maybe in the world, Canopy Growth. You've obviously had your fair share of criticism, but however, there's a lot of growth potential opportunities. So how do you think the company has changed from the early management? Because I think institutions right now, they really want to understand what the management team is today, how they're fiscally responsible, and most importantly, provide shareholder value. So how is the company today, from a capital market structure standpoint, set up to succeed moving forward?
Yeah, so initially the company was set up to, like many of the LPs, to try to be everything to everyone. We're really focused right now on cannabis in North America. We are opportunistic in the medical cannabis segment elsewhere in the world, but that's just to be opportunistic. We also own Stores & Bickle, a flower vaporizer, which is a profitable, differentiated business. And I think it's that focus on where you can win versus trying to be everything to everyone that'll make us successful. And then, and we'll come on to this, but then, we do own some really interesting brands in the US, like Wana and Jetty and Botanist through acreage.
Well, these are all NASDAQ-listed companies. Like, what trends are you seeing right now that Canadian companies need to focus on as they enter into the US market?
Well, during the pandemic, there was a big surge in demand. And now that folks have gone back to work and back to school, the demand has reset to pre-pandemic levels. But during that process, the companies had to do more with less. They didn't have the labor force necessarily. They didn't have the ability to reach out and really touch the consumer. And so they had to do more with less. So some of the trends I'm seeing is getting lean, battle tested. They're changing their models to focus on branding and the consumer experience more so than just throwing money at a problem. And so the whole getting lean and mean and focus on the consumer is kind of where the market's trending right now.
Yeah, that's an understatement. So let's talk about some of those company specifics. Like, you've made some news recently, raised $25 million recently. David, you really kind of like are trying to right size balance sheets, become more cost efficient. So I guess my question is like, in addition to really understanding what the market is right now and the opportunity that presents, how does this look for you if we do see some sort of reform within the next, I don't want to give a timeline, but like if we're forecasting at some point next year, what does that first 60-day kind of like timeline look as far as an action plan for your company to take advantage as far as heading into the U.S. market?
Yeah, so we already have operations in the U.S., but like, you know, Ann and Zach, you have to work around regulatory requirements in order to create value out of those businesses. And what it does is it makes your business hard to describe. And so we own businesses in the U.S. that are, as they generate as much revenue as the rest of our cannabis business combined. So our company's actually twice as big as the numbers that we report, and our U.S. businesses are profitable. But because we're working around the regulatory regime that we're in, and we still want to stay listed on the TSX and the NASDAQ, we build structures in order to make that work, right? And so for me, the benefit of regulatory reform is allowing us to actually talk about the great businesses that we've put together, you know, across the spectrum in Canada.
What are some of the, I guess, challenges that all of you deal with on a day-to-day basis when dealing with regulation of being listed on the NASDAQ? Can you give me some examples of that and what it's like that people may not be aware of?
Well, we can't touch the plant in the U.S.
Right.
So in all of our cases, we have very viable operations existing in Canada, and we can't cross over the border and get them started here without these structures.
Right. Do you want to add to that, Zach?
No, I think Ann said it well.
Yeah. Well, we talk about you, like you're one of the biggest private sector alcohol retailers in Canada with 170 locations, another 196 dispensaries, locations for cannabis in the U.S. So where does it make sense, like you've indicated in the past that retail is the most attractive thing to be in right now. Why do you think that?
Yeah, so in Canada, in the Canadian marketplace today, that is today, anyone that wants to really own the consumer relationship needs to have a very, very strong presence at retail. And that will change over time as some of these brands really capture the attention of consumers. But in the current framework, it's a critical link in the chain. And in the early years in Canada, it was a virtual zero profit environment. So our reaction to that was to get diversified and become leaders in a broader set of regulated product distribution. When you think about Canada today, if you just imagine a U.S. market where you have interstate commerce, but you continue to have that overlay of a state-by-state regulatory framework. In some cases, those states could have consistent regs, and in some cases, they could be completely contradictory. That's basically Canada today. So while it's got a relatively small population, there are a lot of insights that you can glean from what's happening in Canada now, relative to what our expectations are as to the development of the U.S. market. So it would be fair to say that scaled retailers in Canada today are generating more free cash flow and more profitability than the average licensed producer peer in the Canadian market.
Do you find enough people know that?
No.
Yeah, exactly.
And you know, so, and I'd like to add maybe a different perspective on retail. We were under scale in retail. So we had retail stores in Canada, by the way, with our brand name on it, which doesn't go over well with the other retailers, right? So we had some channel conflict there. And we found that we were losing money to try to be at retail subscale. Okay. And so, you know, my view is over time, we move toward an industry where people that are good at retail, like Zach's team, right, we want to partner with them, but we want them to be the retailers. And I think we'll see, instead of trying to be everything to everyone, you know, the industry's probably going to end up looking more like an industry where everyone picks what they're good at and partners with other people to create value.
Bo, is that a trend that you're seeing?
Yeah, I'm starting to see what I call a semiconductor model, where in the semiconductor industry, you have a design team. Once the design is locked down, then you outsource it to other suppliers around the world. The same thing is happening and trending in cannabis, where the major company will develop a brand, or they develop a recipe or a product line, and then once that's locked down, then they'll outsource it to various states. And that's a low-touch model that is hugely profitable in the sense that they don't have to have all this capital outlay to set up each individual market, each individual supply chain in each and every market. So having that and outsourcing it and saying, you do retail, we'll do the brand, it will drive scale by outsourcing in this state or that state. I think that's where the market will ultimately end up.
Yeah, I think that's probably what one of the challenges were in the early days, trying to do too much all at once. Do you think we now get that? We understand that model moving forward, Ann?
I think we do. I think I echo what both David and Zach said. We're picking our spots where we know we can compete. And I think those are the survivors.
Yeah, when you say picking spots, Texas, 3 facilities, including a 5 million square feet facility. Where is Texas right now and how they're looking at this whole cannabis landscape, bipartisan support? What is the total addressable market and how is that progressing along, knowing that you have a facility there that focuses primarily on agriculture? So if there is movement in that, what does that opportunity present for you in the state of Texas?
It's a lot of questions, so
Yeah,
let me try to no, it's fine. Let me try to break them up a little bit. So let's start with the total addressable market. 30 million population,
Right.
second largest state in the United States, size of Canada roughly in population. So probably the last untapped cannabis market. For the longest time, you might have heard us say, it'll be the 52nd market to go rec. Some of what's happening now might force the hands of the Texas government to act sooner. The primary thing that we think could be the advantage is rescheduling at the federal level needs to be replicated due to a constitutional requirement at the Texas level. They may have to now line up their controlled substance schedule to line up with the federal. That would be a way to start to open up the dialogue, quite a bit in Texas. It might not be the straight path. Like other speakers have said today, there's probably going to be plenty of challenges even, in other states, Texas included. But if you just think about the size of the market right now, there are 3 licensed producers.
3.
So it is not a limited licensed state, it is a no licensed state. 2 of those are active. The number of patients registered are about 60,000 of 30 million in population, and we think only 20,000 of those are active. The usage, the definition of what medical cannabis can be used for is very narrow, and the ability to access it is even narrower. So just in order of magnitude, if we start to get some movement in Texas, you could see, for example, opening up more licenses, we have applied for one, would give us, even on the base case medical, might give us 500,000 patients off the bat. If we got to a Florida kind of ramp up, that's 1 million patients. And if we really got to rec, Texas is 10% of the US population, so it's a great opportunity.
So my firm we have total addressable market forecasts for every state in the country and every country in the world. And Texas is a $9 billion market.
$9 billion.
$9 billion market.
For both medical and rec?
For medical and rec, yep.
Wow.
And that's not even including hemp. I mean, there's a large hemp presence in Texas as well.
What's hemp present, do you know?
I don't have the TAM for that because it's still pretty nascent in the way that it's being deployed. But there's a lot of converted cannabinoid products. There's all sorts of smokable, well, smokable is a touchy issue, but there's a lot to hemp on the fiber and grain side, in addition to the cannabinoid side.
How much progress is made as far as just the approval and how cannabis is viewed within the state, would you say, over the last 3 years?
It's a great question. So I'll give you the good news. We do think it polls for the electorate like it does in the US. So it polls favorably. There is bipartisan support.
Yeah.
There might even be approaching bicameral support. We're not quite there yet, but it's getting closer. We do have one blocking person in Texas. The lieutenant governor is probably one of the most powerful single state authorities in the US, and he gets the ability to bring something to the Senate or not. He's the blocking point. And so far he has resisted. And that's one of the reasons why rescheduling may force that issue to allow a broader conversation to happen.
Makes sense. Well, let's talk as we continue down the line just as far as US opportunities. You announced, Zach, last week, announcement regarding the launch of Sunstream USA. and it was restructuring the documentation to Parallel, which is one of the largest vertically integrated cannabis companies in the US. So for those not familiar with that announcement last week, how is that all structured, and how does that fast track, I guess, your presence, knowing that, what I'm hearing here from a lot of the panel is that you're already in the US, but how does that basically fast track your game plan?
Sure. So just a little bit of history here. In 2021, we launched Sunstream.
Yep. And
thereafter deployed about just over $500 million Canadian into U.S. senior secured and structured credit. We knew that a cycle was coming for many states in the U.S. and that we would see some defaults along the way. Two situations specifically, Parallel and SkyMint, were going through state-level receiverships and foreclosures to restructure those. David's team, kind of broke trails, so to speak, in terms of the USA structure. And I don't want to go too deep into the to the plumbing, but effectively, to maintain our NASDAQ listing, we cannot engage in plant-touching activities, and we cannot exercise voting control of any equity that we hold. So it has to be a highly structured transaction with nominees and subsidiary entities that will garner the support of the NASDAQ.
Gotcha. We want to talk about you as well, David. It's been, roughly 4 years since the announcement with Acreage. So if there is some sort of reform within the next, again, timeline-wise, I don't really want to speculate, but let's say in a hopeful standpoint, it's the next 12 months. What does that look like as far as the Acreage holdings, how it gets rebranded, what you guys will focus on, Canopy USA? Maybe walk us, basically explain what your story will be, and people to have a better understanding of the two entities.
Yeah, so we want to, again, take some of the learnings that we gained the hard way in Canada and stay as agile as we can in the US, be asset light, be brand focused. And so, I guess what it'll look like when we're finished is kind of what it's starting to look like already today, where we have WANA, which is in 14 or 15 states at this point across the U.S.
Yeah.
through partners. But where it's really working well is in a state like Maryland, where we have a 19% stake in TerrAscend. TerrAscend brings WANA into Maryland, and it's doing really well for both companies, right? And so, getting WANA and Jetty, our vape brand, and Acreage with their brands, and TerrAscend, working closely together to try to create some momentum behind the brands and open up new markets. And ultimately, it'll look like a business unit under Canopy. It just can't today in order to comply with all of the regs.
Right. What would you say, Bo, when looking at this our topic here? How much opportunity and how much, I guess, realization is there that Canadian companies will have an impact on the U.S. market from what you're collecting?
How much impact? So
a lot, Bo. That's the.
well, because they were the first to do this federally, they're setting the trends for everybody else to follow. And so by reacting to the market, becoming lean, and then entering into the newer markets, then they're setting the stage for everybody else. Now, in the US, there's 3 different markets within a market. There's the mature markets, like Oregon, Washington, Colorado, and their growth trajectory in those markets are leveling. And then there's the markets that have already deployed, and in those markets, like Illinois, for example, they're starting to catch their stride and capture more of the illicit to legal consumer business. Where the real growth is in the new markets like New York. And New York has their issues in terms of deployment and the like, but where the real growth will occur in the United States will be in these newly deployed markets. So you think about Pennsylvania, Ohio, Maryland, New York. I think that's where things are going and where the action is. And so by demonstrating leadership, the Canadian companies are saying, we believe in these markets, and then it's adding and instilling confidence for the other people to follow.
Does New York get it right?
No, I've done some work for some folks on the stage that looked at the New York model, and it's kind of upside down right now. So it'd be better off for New York to offer opportunities and low barriers to entry for the larger operators, so that they can set the stage and set up the market for success for the smaller operators.
What about Florida?
Florida's intriguing right now. You've got the medical market, and you've got strong opinions on favorability for legalization for rec. I mean, that's a huge market right there. And then you've also got big hemp industry in Florida as well. So, I think as long as there's the cooperation between the two sides of that THC fence, you're going to see big things out of Florida.
Outside of flower, we've talked a little bit about hemp. What do you see as far as cannabis beverages and how that'll develop over the next 5-10 years pertaining to the data that you're collecting?
So we've looked at the market segmentation. We pull data every month. We look at transactional data, state data, you name it, illicit data. And the beverage market is in the single digits right now, but it's slated to grow dramatically as more and more consumers look towards beverages rather than smokable flower. And so the growth trajectory for the beverage market is huge. And there's been compelling models developed that show that it could be even larger than the energy drink market.
Wow. So does that make sense, Zach, with your background, maybe to acquire alcohol assets in the future?
Well, so we have a large liquor distribution network in Western Canada. We also have infused beverage manufacturing capabilities. And that's a segment that is very small today in Canada. It's been no more than 2-3%. Mm-hmm. And a 10 milligram can at retail will run you $6 to $10 Canadian. So it's just much too high. So the accessibility and the convenience has to increase dramatically. We're watching markets like Minnesota really carefully, where they've allowed for certain infused beverage to enter liquor retail. And to the extent that meets some of the regulators' objectives in terms of harm reduction, they may want to push people away from hard spirits consumption or inhalables. It's a great product class for that. So it's going to take time for sure, and a lot of work to develop the segment.
So what do you think some of that work is going to be required? Like, how do we start to embrace it more and become normal, or more of a normalization for the American people? Like, will we see one day a Super Bowl commercial for a cannabis beverage product?
I don't see why not.
Yeah.
I mean, it's one of these things where more is more. You need more volume, you need price down, you need a lot of competition.
Yeah.
And it's going to take years for that to happen.
But I look at the trends that are happening right now amongst university students in the consumption. Alcohol consumption is way down, and why wake up with a hangover, right?
Yeah, look, I've seen data that suggests that 69% of people between 18 and 24 years old prefer cannabis to alcohol. And so, when you're thinking about an investment thesis, that kind of macro trend is super powerful, especially when you combine it with numbers like, $9 billion market in Texas, right? What has to happen, though, is more accessibility. And that may be what people are trying to access through almost the hemp-derived drinks and edibles category, because they don't have to be sold in dispensaries, which is questionable from a regulatory standpoint to have that bifurcation. But I think we'll see a big growth in that area, because you don't have to go through the experience of going into a cannabis dispensary in order to try a beverage and say, decide what you think about it. And my experience is every time we get a consumer to try something like a drink or an edible, they tell you what a great experience it was, but they might not go out of their way to go into a dispensary to buy it.
Interesting.
And I would just add to David's point that the consistency of the product is going to matter a lot,
huge.
And we're not there yet.
Yeah. How do we get there?
Well, I think the asset-light model and finding the right partners may be one way to go, that what David has described. I think consistency in cultivation and the ability to convert that consistently into products is where we sit very strong. And I think, frankly, as we get the startup, and it's years away, of interstate commerce, where we don't go from state to state, or just a couple of miles away and find a completely different product set that will also help us to scale up, to Zach's point earlier.
When we talk about interstate commerce, will that happen, do you think, Bo?
Absolutely. It's just it's not a matter of if, it's more a matter of when. And there's lots of, once you get that, then you'll see moderations of pricing, you'll see a flow of goods and services across borders, then you'll be able to scale. That's one of the big pillars of success in the cannabis, is the ability to scale. And then you'll be able to establish these national brands much more easily than you would if you have to go state by state by state.
So how does, okay, so I was going to say, how does that work when with each state having a different formulation for interstate commerce? So you're thinking it'll be a broad spectrum across the country?
Yeah, if you think about it, the key to all this from a branding perspective is if the user experience is consistent time and time and time again. And by doing that and having that from state to state, then the brands will really take off. The consumer adoption rates will be high.
Makes sense. Hence the reason what you said about consistency, right?
Yep.
There's a lot of new technology coming in on the beverage side too to create homogeneity so that you don't have, a flavor at the top and all the cannabis, settling at the bottom. So there's new technologies emerging out there on these types of brands and product offerings.
Emergence of an industry, right? So we got about 10 minutes left. I think it's important to share, what do you think are the biggest lessons each of you have learned? It's been, how long has it been now? It's been 5 years since federally legalized in Canada. A lot of these companies, like you said, you've been in this industry for the better portion of almost 10 years now. So I've said the term battle tested. If I were to ask each and every one of you, what do you think are the most important lessons that you've learned in your career and operations with this company, and how do you apply that to have a competitive edge into the US? Zach, I'll begin with you.
I would say, look, our most important assets, it really comes down to our leadership team.
Okay.
And in terms of why Canadian companies have this very unique experience, why we can claim to be battle tested, it goes back to just the most basic, at the most basic level in cannabis, we have a national wholesale flower market. We have almost unlimited licensing. We have rampant oversupply. You can buy grade A flower in scale in Canada at around 50 cents a gram CAD right now. Right? So when we think about these different scenarios for the future of the US, we've seen it. We've seen it in small scale, and it's Canada.
Interesting.
So I think what people get wrong is just how much commodity risk is inherent in the sector.
David, to his point, based off of that information, do you see things that you could improve on, or you see how there are challenges in the US market that could capitalize off of stuff like that?
Yeah, look, I think, and I'll actually go along with Zach's point as well. You need good thinkers and you need agility. You need to be able to bring beverages to the market. When we first launched beverages in Canada, we had trouble controlling the THC level because we learned the THC was leaching into the can liner. Right?
Wow.
So these are things that you couldn't go to a CMO at the time and say, give me your experience in producing beverages. We were making it up on the fly. I think bringing a bit of humility and the willingness to be agile is I think almost at a unique level in cannabis companies, because we're inventing this all as we go. And so, yeah, look, I think that we would bring, as I said earlier, our experience, which is unique to us, right? But we would bring our experience where we want to focus on brands, and we want to be asset light. There are other people that are going to be experts in other areas, and they'll have a different strategy. And the cool thing about it is this industry is huge.
Yeah.
This industry is going to be very profitable, and there's not going to be one winner. There's going to be many winners in the space. And look, we're all, actually, I'd like to see us working together more frequently than trying to kill each other, because it's a tough enough industry to be in. So I'm not sure I answered your question at all, but.
No, but I actually think that's something that we didn't hear 5 years ago, nor the word humility. But companies are working with each other now to support each other, to understand, to further educate the narrative about what the potential is here. So when I bring up these questions to both Zach and David, as well as yourself, Ann, what do you think is the biggest misconceptions that people don't understand about Canadian companies that are here, still existing today, that, like I said, have a strategy heading into, well, even if it's not even the U.S. market, like what's the biggest misconception that people don't understand about established companies that are doing well within the Canadian market?
So we have a viable business model. We've
Right.
survived. Let's start there. And Zach has laid out all of the things that we had to navigate around, the icebergs along the way. So that's number one. Number two is we are building brands, to David's point. We're building consumer-tested products and consumer-accepted products. We're leaning in with our customers. We're very grateful for people like Zach that are building those verticals.
Right.
So, I mean, let's not forget, this is a business that was nothing 5 years ago. I don't know of many consumer products companies.
So let's federally legalize it, right?
Yeah, right. Let's federally legalize it, and then let's take your taxes, and we won't do anything
Right.
further. So we've really built this against, all odds, and I think that's a very credible story that is not told well. Number two, I would just say you can feel us starting to segment to where we do best. So I think that also speaks to the maturing of an industry, from the producer, from the retailer, from the asset light model. That's all important for us
Right.
to now build from. In our case, we've been very disciplined around where we're going to lay down our capital and how we're going to cultivate at scale, bring forward the best competitive cost structure we can so we can invest in the verticals like brands, innovation, consumer, and customer.
Right. And Ann talked about just trends as to what they're focusing on heading into the future. But when I look at trends that you're collecting as far as data, what should investors pay attention to closely over the next 3 to 6 months that pertain to both the Canadian and U.S. market?
Well, what my firm has been doing recently is we've been shifting our focus more onto the risk assessment and risk mitigation side. And so there's these inherent risks throughout the models, right? Market entry, policy changes at the state and federal level, all of this stuff. And it's the landscape is constantly changing. So we're providing these services to investors and to large corporations and the like to say, hey, your market strategy, 6 months ago is no longer applicable because it's fraught with risk. And here's how you address that. So the trends for right now, it's staying lean, understanding the market, identifying those risks, and having plans in place to remain flexible and to address the risks without having them become too burdensome or too costly.
Do you believe that there will be a few Canadian companies, maybe not even a few, but a lot of Canadian companies that will do well in the U.S. market?
Oh, absolutely. I mean, they're already here, right? And so they're doing well. It's just more a matter of the success factors. And so I say that there's 3 things that will define success or failure in the cannabis space. There's branding, there's the ability to scale, and supply chain management. And so if you have a solid brand and the ability to scale that brand, then you're going to be better off than, say, somebody that doesn't have one of those 3 pillars. So the more disciplined that the Canadian firms are, the more disciplined that the U.S. firms are in their approach to those 3 topics, then the better chances they'll have to be successful.
Right. He talked about branding, Zach. Give us maybe an example as to like how much more of an opportunity is for branding opportunities in the U.S. versus what you're currently experiencing in Canada.
Yeah, look, we have significant restrictions on
100%.
all forms of marketing.
Yeah.
We're regulated very much like tobacco, despite us constantly talking about this being a wellness space. Mm-hmm. So to some extent, we have to bring together the consumer's view with that of the regulators to align them much better. But smart operators in Canada are finding ways to capture the attention of consumers. And I would say that the commoditization of branded product is still a big problem in the U.S. as well. And we have the data at retail that shows the willingness to switch, what brands are sticky and which aren't. I think it's an enormous opportunity. It's just such early days.
Right. David, he's right about the restrictions in Canada. It's crazy, the branding restrictions. What are strategies that you think that you could implement when stepping into the U.S. market based off of having like a very well-known name already within not only the cannabis community, but a lot of people outside of the cannabis community are very familiar with your name in a lot of your products?
Yeah, so I think it's not necessarily like traditional marketing. I think it's more like guerrilla sorts of tactics. It's using social platforms versus traditional media. I think it's a different playbook. The cool thing is we're not competing with last year's budgets or last year's programs. We get to whiteboard this as we go, and that's where Zach's team does a great job of mining data out of what happens in their stores and like reaching into sources like that to understand what's working with consumers. In Canada, the regime is all about harm reduction, right? And so if any of you have been into a cannabis dispensary, you walk in and literally the first thing you learn is you're probably going to die before you leave the dispensary because of all the warning labels, right? And so we've started to work on things like glamour packaging so that you can just have real stuff that looks like it's normal to consumers. And there's some retailers in Canada now that you walk in and it feels like it's just another shop along the street, as opposed to feeling like you're going into some place that's disreputable. So I think it's just being agile and applying common sense marketing, but not trying to go and be a big CPG company, because that's not who we are.
Good point. Ideas come to your mind, Ann. What are they?
Sorry, say it again.
As far as just branding and kind of like, following up with what Zach and David had to say with a lot of the warning labels, but...
Yeah, I mean, absolutely the ability to communicate with the consumer is very restricted. I'll just share our approach, because I think there were some lessons we learned along the way. We launched only one brand. We didn't have a group of brands, and we really invested behind that brand and the communication that we could do. Stayed very focused on that, and some of the team is here that really helped to build the communication and marketing behind that. As we saw the consumer segment out, then we started to launch a couple more brands, and that's also a positive in the maturing of the industry as we start to see that happen. And so I think one of the things that we learned along the way is you cannot be everything to everyone, and knowing where your strength is and really building that has been really important to us.
That's great. Okay, we'll wrap this up. Last question I want to ask. David, you're in front of a group of institutional investors. Why should we invest into you as being a major player within the U.S. market? What's your response?
My response is that, and I'll build on what we said earlier, the lessons learned, keeping our business agile, asset light, and brand focus will allow us to create a lot of value for our shareholders. And look, this is we're just in this crazy cycle in the cannabis industry. But if you were excited about investing in cannabis with $9 billion markets in a single state, if you were excited about that in 2018, you should be really excited about it now, because now the companies kind of know what to do.
Yeah, good point. Zach, you mentioned that. What would your message be?
Mine is just a bit more idiosyncratic. Our business today is trading at roughly the value of our cash reserves and our credit portfolio, with no credit for diversified Canadian operations that are doing almost $1 billion in revenue. So I would say that we represent a value opportunity with very interesting optionality in the U.S., where we've picked spots, and I think as time goes by, you're going to see the risk reward of our exposures, starting in credit, moving into equity in certain circumstances, to be something that will reward investors.
It's great. Value proposition, as Zach just indicated. Ann, what's yours?
I think we all have that value proposition. I would say ours is 30-year history of controlled environment agriculture that we've successfully applied over the last 4 years to Canada. We do have a top 3 consistent market share in Canada. We've built our business organically, and I think that matters a lot as to how we've invested our capital. We're shareholders alongside the shareholders in this room. And lastly, I would just say that the U.S. represents a great opportunity, and we have assets on the ground in Texas. We have a great team in Colorado. We're ready to go.
That's great. Bo, a lot of great information shared here today. As I said, you're collecting and tracking data in the global cannabis market. Where can people learn more about the information that you're collecting, and to find out, like we said, what can we anticipate over the next 3 to 6 months?
Yeah, so my firm is Whitney Economics, so just go to whitneyeconomics.com, and there's a lot of data there. But I just want to make one final comment, is that as beat down as the market seems to be in the US and in Canada, last year there was $26 billion in sales in the United States, and we're on track for just shy of $30 billion this year. But that only represents 28% of the total market value. And so if you think about it, by 2025, that's going to raise to 38% of the legal versus illicit. By 2030, it's going to be 65 to 70%. So we're just at the beginning of this. This has been a race to the beginning line, a race to the starting line. This isn't a race to the finish line. And so there's lots of potential. And so I think people should realize that there's huge upside in this market to be gleaned in the next foreseeable future.
The key is looking at this industry not in the short term, but long term, right? Absolutely. If you're looking at investment opportunities today, do you believe in the company being more valuable 5 years down the road, not looking at it as 5 days, right? Bo, David, Zach, Ann, appreciate your time. Most importantly, just keep the progress going. Best of luck, and I hope you all enjoyed this panel. How about a big round of applause for our panelists here?
Thank you, Chad.